on the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and our partnership with YouTube. Looking right now at a Dow Industrial Average having its best day of the year, Massar. A Russell 2000 having its best day of the year, Massar. And the S&P 500 at one point today flirting with the potential technical bull market.
It's amazing how close, right, from that kind of mid-October low of last year, almost that 20% bump to the upside on the S&P. I thought it was really fascinating when we talked earlier, guys, about Caterpillar, 3M. It's not your big tech names. It's not your AI names that are really kind of leading the way on this Friday. It's a much more broadening out of the gains in kind of your old core economy types of companies.
It's as if the market was listening to us on the closed simulcast yesterday when we said, either the rest of the market has to catch up with big tech or big tech has to come back down. Well, it looks like the former is happening. We are seeing, look, the Dow Jones, as a great example, is the biggest gainer of the three major indexes. You have the S&P in the middle there and the NASDAQ bringing up the rear, only up 1% compared to the Dow's 2%. So it's those big old economy companies that are putting up the big gains today.
Yeah, I'm also looking at the S&P 500 volume in the index and in SPY, the ETF that tracks the S&P 500, is higher than the 10-day average. For the Russell 2000, pretty much in line, just a little bit lower. And I'm curious as well about the QQQ or the NASDAQ 100 because that's the laggard on the day.
Oh, let's walk you through the closing bells here because there is a lot to talk about here on this Friday afternoon. A Dow Jones Industrial Average up almost 700 points, up about 2% on the day. We'll double check these numbers, but that appears to be the best day of the year. The S&P 500 higher by 61 points, up 1.5%, right around 4,282, and that is right around up about 19.5% from that October low, so on the verge of a technical bull market. The NASDAQ 100 higher by 140 points, or 1% on the day. The NASDAQ 100 up about 0.7%. Those are your laggards. And I want to turn your attention right now to the Russell 2000. It is closing out the day higher by 63 points or 3.6% here. The differential between the Russell 2000 and the NASDAQ 100, the widest to the upside for the Russell that we've seen going back to March of 2021.
All right. Well, something that certainly has been on our radar over the last couple of weeks as we watch those debt negotiations out of D.C., and that is the amount of money the U.S. government has to pay its bills, plunging to the lowest level in more than 7 years, just as Congress passed that legislation that suspends the statutory borrowing limit until 2025. So again, U.S. cash pile dropping to 22.8 almost 23 billion, matching the low last seen in 2015. So it's something we've talked about.
And we should just point out, too, I mean, President Biden is scheduled to sign that bill tomorrow. He's supposed to address the nation. So in theory, this should now start to right-size itself within the next few weeks.
Take a look at the groups that are gaining. I mean, obviously, all of them are up here if you break down the S&P 500 into 11 industry groups. But the materials, industrials, and energy companies are the biggest gainers here. Only communication services seems unchanged. And that's, of course, like social media and streaming services down there. So it really was a broad-based rally today. And I think the best week since March 31st, so the best week in the second quarter thus far.
All right, folks, let's get to some of the individual gainers on this Friday. There were a lot to choose from, so lucky me. Dish Network, number one in the S&P 500. Folks, at its highs today, up 25%. Finishing the day, though, not quite at that level, but still with about a 16% gain. Bloomberg exclusive that Amazon is in talks to offer mobile services to U.S. Prime members, said to be talking with Verizon, T-Mobile, and Dish. We know some sources have come out and said, I think AT&T and Verizon have said to Dow Jones that they're not, that's not what's happening. But nonetheless, Dish getting quite a pop in today's session. Lululemon, let's go there. It is number one in the NASDAQ 100, a gain of about 11% in today's session, but it was up as much as about 18%. This is after reporting first quarter net revenue that beat estimates. We broke those results last night. Analysts were a little nervous that they weren't going to be so good, so they were better than feared. And it also talked about some of the growth that that company is seeing in China. And then Broadcom, we also broke that down last night. Turns out NVIDIA, not the only chip maker that is benefiting from the AI frenzy. That stock, Scarlet, up about 2.8% in today's session. It is now up about 40% so far in 2023.
Yeah, kind of notable given that the other AI adjacent names are falling today. Okay, let's take a look at losers on the heels of what you were just saying, Carol. Verizon falling as much as 5.6% to the lowest in almost 6 years. Bloomberg Intelligence says that if Amazon does come out with this wireless offer, that perhaps we'll see more market share taking up more market share. The legacy carriers have already lost share to cable providers who have entered the market with $30 a month plans. So just imagine what that means for these guys. And Cooper, which is a contact lens maker, down 4.75%. Quarterly earnings beat. I should say it increased its forecast, and that was solid, but not good enough. And PagerDuty is one of the biggest losers in the the Russell 2000. There we go. It's a San Francisco-based enterprise software company. It cut its forecast, saying the worsening economy has led to its customers turning more cautious in their spending, reducing deal sizes, and dragging their feet on making purchases. And
is that like Beeper King?
No, it's not. It's an enterprise software company.
Yeah, so I guess
moved on from that.
So I guess as we focus here so much here on the big run that we had in the market here, of course, potentially on the verge of a bull market for the S&P 500, we kind of ignored the fact that you had a huge spike in yields. In fact, the entire Treasury curve shifting higher here on this Friday, and that was largely because of that labor market report. And now the expectations about what the Fed does next: 16 basis points higher on a 2-year, 10 basis points higher on a 10, 7 on a 20, and about 7 on a 30-year yield right now. Now, of course, this has kind of been oscillating. Remember, we just came off of a big rally in that space here. So seeing that peel back here on this Friday just kind of puts us back to square one, but still interesting moves here as to what the bond market now is pricing in versus what the equity market, guys, is pricing in.
It absolutely adds also to the competition to equities, right? You can imagine with 2-year yields at more than 4.5% again that investors, especially mom and pops, are going to say, why don't I just park my money in this relatively risk-free asset and earn 4.5% than mess with stocks that are flirting with a bull market again for seemingly no real reason other than AI, which what is that even?
Yeah, but we'll see whether or not the broadening out of the market trade, certainly on the equity side of things that we saw today, does it continue into next week? I am curious, now that we've kind of, Scarlet, crossed off, the debt ceiling and that, we expect, of course, the president to sign it. Like, what is the next focal point and what is the next kind of worry point, if you will? Yeah,
well, the jobs report is over, so we do have some data coming up, but we're in that quiet period where earnings is largely over as well. So I'm guessing Fed speak will dominate.
Well, don't forget, actually, the Fed members are going to a quiet period starting at the end of today. So, unless they speak before midnight, that's pretty much it until we get that meeting in a couple of weeks.
They've kind of said a lot, don't you think?
They've already told us what they're going to do, right?
Yeah.
Everybody on the street except for Priya Misra knows that they're going to hold.
Yeah, we just had a market conversation. And our guest said basically that's what the Fed did, right? The officials were out there in full force and basically delivered to the market. Folks were going to pause at this point, and that's why you're seeing the trade.
It raises a question, though, too.
She doesn't buy it, by the way.
Yeah. It raises a question, though, too, about the catalyst, right? And I'm curious as to whether not having earnings, not having major eco data, not having Fed speaks, does that actually work in the market's favor, where basically, hey, they can just kind of run wild, or do you think it can maybe has the opposite effect, a dampening effect?
It depends on how many companies come out and say they're doing something with AI.
Okay.
We've seen run wild today.
All said that? What if Jay Powell came out?
Everybody's up except for Beeper King.
What would that do for the market?
I'm willing to bet that someone will say that's a better way of running a monetary policy.
By AI?
Scarlett, don't you remember the Beeper King, Dennis Duffy?
The Beeper King, Dennis Duffy?
Yeah.
Is this a blast from the past?
Well, you bring up PagerDuty.
I'm going to be hearing about this for the next 60 minutes, aren't I?
PagerDuty is not a company that sells pagers.
No, I don't know. We were talking about earnings estimates, right, Matt, in our last segment, and they've been coming down. So, I've got to go back to fundamentals. And what do we hear maybe from companies? You're right. We're out of the earnings season, Romaine. So I don't know what we trade on. And do we get a little lost?
But we're going to get right back into it.
I will say this, though. We talk so much about how we've had these rallies, and this is the strongest that we've had in some time, and broadest, I should say. But there's always a question about sustainability. But I did think it was interesting to see the VIX go back down below 15 here, a pretty meaningful move lower here on a points basis. Even some of the other volatility metrics have tamped down as well. And while the yield space is kind of all over the place here, it does kind of give you the sense here that investors, the mindset, at least based on what we can view by the price action, is a lot more bullish than what it was even just a couple of weeks ago.
Yeah, and does it matter, though, that to some extent, if you look at some of the technicals, certainly on the S&P 500, we're close to overbought, or, so do we see a little bit
Well, then NASDAQ 100 is like a 75
Things can remain overbought for a very long time.
And that's been overbought.
Right.
But that can change, too, because think about it. You talk about, even if you go to the NASDAQ 100 and you look at in an aggregate, an overbought level, but going in some of the individual members here, you still have a lot of names in there that, in theory, probably have a little bit more of a value proposition to them than you would think.
We need the dartboard or something for next week, right, to get us through. Or we need bunny, or rabbit,
Monkeys.
rabbit.
No, not until July 1st, Carol. Sorry.
All right, guys, have a great weekend. That's going to do it for our cross-platform coverage. Our shortened holiday trading week feels like it was a full week. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We will see you again, same time, same place on Monday.